Welcome to the deep dive. Today we're plunging into the buzzing world of crypto, specifically focusing on Cardano and its native token, ADA. It feels like everyone has questions about it right now.
Absolutely. What really drives its price? That's the big one.
Exactly. And maybe more importantly, what can we realistically expect for its future?
Yeah.
So for this deep dive, we've gone through a pretty fascinating stack of sources, articles, research, expert analyses.
A lot out there.
Definitely.
Yeah.
They shed light on Cardano's, unique technical foundation, its evolving ecosystem.
And the predictions, some really wild ones floating around for its value.
Oh.
Totally wild.
So our mission today is basically to cut through all that noise.
Right.
Pull out the absolute must-knows for you. We want to give you a clear, well-rounded understanding of Cardano.
Without getting totally lost in the tech jargon.
Exactly. Or feeling overwhelmed by, all the conflicting information. You'll see why its price is influenced by so many different things.
Both internal stuff and the wider market forces.
Okay, let's start by really unpacking Cardano's unique approach. Our sources kept highlighting this research-driven development model.
The peer-reviewed process.
Yeah, emphasizing new features crafted through peer review. So what exactly does this research-first philosophy mean for a blockchain?
Well, it's a foundational difference, really.
How so? How does it compare?
Cardano's commitment to peer-reviewed academic research means its upgrades are incredibly rigorously vetted before they go live.
Okay.
And at its core, it uses an energy-efficient proof-of-stake system, POS. It's called Ouroboros.
Right, Ouroboros.
Yeah.
Less energy than proof of work, like Bitcoin uses.
Considerably less. This eco-friendly design is a big deal, aligns with global sustainability goals, gives it a strong appeal.
And decentralization, the sources mention that too.
Also paramount. It aims for operational independence, a kind of sustainable balance between community participation and governance.
So it's not just a tech choice, it's about long-term resilience.
Exactly. It's designed to make Cardano really robust and adaptable for the long haul.
That's incredibly structured. But, in a space like crypto that moves so fast, some might argue that such a fixed roadmap, these eras, could maybe hinder agility compared to more fluid development.
That's a fair point.
Yeah.
And yeah, some critics do point to the slower, more methodical pace.
Okay.
But the sources mostly frame these eras as a strength, a clear progression.
Got it. Walk us through them.
Sure. So the Byron era, that was the foundation. Building the network, letting people buy and sell ADA, using Ouroboros for security, basic stuff.
Right.
Then came Shelley.
Yeah.
That was truly transformative. It shifted network control to the community through staking.
So more decentralized.
Dramatically enhanced security and resilience because of that decentralization.
Okay, then Goguen.
Goguen was the major leap. Introduced smart contracts.
Yeah, the dApps era.
Exactly. Unlocks possibilities for decentralized applications, support for tokens, NFTs, made the network way more versatile.
And after Goguen?
Basho. That era zeroed in on scalability, using sidechains to boost performance, handle more transactions.
Needed for growth.
Definitely. And now we're in the Voltaire era. This is all about self-governance. It includes a voting and treasury system, so the community gets direct control over network upgrades, how funds are spent, really empowering the users.
So everything seems to be lining up for Cardano's growth, technically speaking.
On paper, yes.
But our sources revealed a fascinating paradox when we look at the developers, the people actually building this stuff.
Right.
Before we get there, though, let's talk about what's happening on the ground.
Okay.
Sources mentioned some really impressive growth in smart contracts recently. What are the numbers?
The numbers are compelling, yeah. Cardano added nearly 100,000 new smart contracts in 2024 alone.
Wow, 100,000.
And specifically, Plutus V2 scripts, that's their smart contract language, saw a dramatic surge. Jumped from just over 8,000 to more than 104,000.
Huge increase.
Massive. And Plutus V3 also came out, coinciding with the Chang hard fork. These V2 and V3 upgrades allow for more complex, efficient, secure dApps.
So better tools for builders?
Exactly. It directly boosts the network's ability to host sophisticated DeFi protocols and applications.
That growth sounds incredibly healthy, but to really grasp the network's vitality, we need to look under the hood. The on-chain data.
Absolutely. Key health metrics.
What are they telling us?
Well, when you dig into the on-chain analytics, the first thing that jumps out is staking activity.
Okay.
Roughly 71.8% of circulating ADA is currently staked.
It's high, over 70%.
It is. Reflects strong investor confidence, and it acts as a pretty significant stabilizing factor for the price.
Makes sense. What else?
We're also seeing rising transaction volumes, clear sign of increased network usage. Recent data showed over 840,000 transactions.
Wow.
And total fees hit around 279,000 ADA. Plus, you've got a growing number of new addresses, active users. It all points to increasing interest and adoption.
Okay, so the network itself seems busy. Beyond the numbers, though, how is Cardano actually building its real-world presence, expanding its influence?
Yeah, they've been pretty proactive there, fostering partnerships, driving real-world adoption.
Like with who?
Collaborations with universities, businesses, even governments. Paving the way for practical blockchain applications, not just speculation.
Any specific examples stand out?
A really notable one is the partnership with the Ethiopian government,
Oh, right. I read about that.
aiming to provide secure digital identities for 5 million students and teachers.
That's significant real-world impact.
Huge. And within the crypto space itself, you see growing DeFi usage, supporting decentralized exchanges like MinSwap and SundaySwap, plus lending protocols.
So given all this positive growth, the tech upgrades, the real-world stuff, you'd expect developers to be flocking to Cardano, right? But our sources revealed something kind of surprising about developer activity, even compared to Ethereum.
It is a fascinating insight, isn't it? Cardano actually surpassed Ethereum in core developer activity.
Surpassed Ethereum.
Really? In core activity, yeah. Most actively developed blockchain based on GitHub commits, over 21,400 in the past year. Ethereum was second, just over 20,700.
Okay, so core development is strong, but
But, and this is crucial, both Cardano and Ethereum saw declines in overall ecosystem engagement. Total commit contributions were down for both.
that's quite a twist. Core activity up for Cardano, but overall engagement down across the board. Why?
Yeah, why might developer interest be slowing down, even for the big players? What does that signal?
Good question.
This decline isn't just about competition, I think. It's a critical signal. It makes you ask, are developers shifting? Maybe from that build anything crypto boom idea
Just something else.
to maybe a more focused problem-solving approach in specific niches, or even leaving for, say, AI, where there's a lot of funding right now.
Interesting theory.
The real insight is how this trend could redefine what active development actually means for a blockchain long-term health.
So what factors are driving this potential slowdown?
Well, several things. Internal conflicts, delays over upgrades on some chains, like Ethereum has had.
Right.
Cardano's own slow, research-focused approach, while thorough, can sometimes seem less appealing if you want to launch something fast.
The trade-off for rigor.
Exactly. Then there's just intense competition from newer blockchains offering faster speeds, lower fees.
And the potential AI drain you mentioned.
Yeah, some analysts suggest a broader developer exodus from crypto as funding pivots.
There's also an intriguing debate in our sources about smart contracts themselves, especially comparing Cardano and Ethereum. Seems like there's a trade-off there too.
Indeed. There's a nuanced discussion. One key difference. Cardano's native tokens don't need smart contracts just to be moved around.
Okay.
Some argue this makes Cardano transactions inherently safer from certain wallet-draining scams you see elsewhere.
Ah, interesting security angle.
But Ethereum's ERC20 tokens are generally more feature-rich, more programmable.
Like how?
Well, they allow functions like freeze functions for stablecoins, USDC, USDT, often a compliance requirement for the big issuers.
And Cardano doesn't have that yet.
They're actively developing similar programmable freeze functions.
Yeah.
But getting those major stablecoins widely adopted on Cardano really hinges on getting those features fully deployed.
Gotcha.
So while the number of smart contracts on Cardano has grown impressively,
Right. That 100K jump.
some sources still point to relatively minuscule volume of actual smart contract use outside a few specific dApps.
So the capability is there, but broad utilization is still cooking.
That seems to be the suggestion. Still very much in development in terms of widespread use.
Okay, now for the burning question, the one on everyone's mind. ADA's price. Our sources gave us some recent numbers, trading around, $0.70 in early June, but then dropping to below $0.60 by June 19th.
Yeah, 0.5978 cents. That's a significant short-term slide.
What's the technical picture look like?
From a technical angle, yeah, ADA shows some vulnerability right now. It broke below an ascending trend line that had been supporting it.
Not good.
Dipped below key moving averages too. And you're seeing the Bollinger Bands expanding.
Which means?
Typically indicates potential volatility, market indecision,
Right.
and getting rejected from resistance around 0.69 cents and 77 cents definitely strengthened the bearish feeling short term.
And zooming out, it can't all be just Cardano's chart, right? What about broader trends, macroeconomics, regulations?
Oh, absolutely. External factors play a huge role. The whole crypto market lost momentum recently. Macro uncertainty is a big part of that.
How does that play out?
Well, global financial policy, economic uncertainty.
Yeah.
Sometimes it pushes investors towards crypto as an alternative, but often it just leads to caution everywhere, risk-off sentiment.
Right. What about institutional adoption? That's usually a driver.
It is. And it's notable that Grayscale increased its ADA share to 20% in its smart contract platform X Ethereum fund this year.
Okay, so some growing institutional interest there.
Definitely highlights that. But crucially, the evolving regulatory landscape is a big one,
The SEC.
especially the US SEC classifying ADA as a potential security. That poses significant challenges.
How so?
It impacts perception, how it's traded, how it can be utilized, creates this cloud of uncertainty hanging over it.
Yeah, regulatory overhang is always tough. It's clear forecasting crypto is, well, tricky business.
Understatement of the year.
Our sources presented a truly wide range of predictions for ADA in 2025, from wildly optimistic to quite pessimistic. Like, everyone's looking at a different crystal ball.
It is pretty amazing how vast those ranges are. You've got optimistic outlooks citing tech progress, DeFi adoption, institutional interest,
What kind of numbers?
forecasts from an average of maybe $0.86 from Jangely,
Right.
up to a possible $1.48 from CoinDataFlow.
Okay.
And then some incredibly bullish ones, like Benzinga suggesting up to $5.66 by end of 2025.
Wow, $5.66. That's ambitious.
Very. But then you have the critical bear scenarios warning of declines, citing regulations, maybe limited DeFi adoption, delays.
Any price targets there?
One analysis suggested a fall to Dylan under 50 cents if it drops below that 70 cents mark again.
Okay. And the middle ground?
Then there are those predicting sideways movement, maybe bouncing between, say, $10.83 and $1.20, reflecting investor caution, low volatility, waiting for clearer signals.
It really covers all the bases. And what about past predictions? Any lessons there?
Not very accurate, generally. It's a good reminder of how unpredictable this all is.
Like?
Well, Waldenvisor, for example, predicted ADA at $0.03 by end of 2022.
And the actual was?
It's $2.24. Way off. Same story for 2023 forecasts widely missed the mark. It just highlights the volatility.
So ultimately then, Cardano's future success seems to hinge on a few things. Fully deploying that smart contract ecosystem, attracting real DApp users.
And navigating its unique development style.
Right, plus the intense competition.
It's a complex mix.
Wow, this deep dive has certainly illuminated the complex yet fascinating world of Cardano.
Definitely a lot going on there.
From its, scientific development model and that impressive smart contract growth to the ongoing debates about real-world utility and those wild swings in price predictions. There's a lot for us to consider.
Yeah, I think a key takeaway is that while the tech advancements and the community are a really solid foundation for Cardano, its ultimate path is just heavily influenced by unpredictable market conditions, those evolving regulations we talked about, and just fierce competition.
It's a constant balancing act.
Absolutely.
And remember, this deep dive is a shortcut to being well-informed, designed to help you understand the landscape.
But it's definitely not financial advice.
Absolutely not. We've simply laid out the facts and the various perspectives for you to consider.
Which actually raises an important question, I think, for all of us to ponder.
Oh.
Given how crucial developer activity is seen for a blockchain success, and considering those recent declines in overall developer engagement for both Cardano and Ethereum.
Right, that paradox.
What does that trend tell us about the broader health, maybe the future direction of the whole decentralized application ecosystem?
Good question. Is it maturing, shifting focus, consolidating?
Something to think about as you continue your own deep dives.